My check, my check. All right, it looks like I can hear myself. All right, good morning, good afternoon, good night, techies and scientists. Welcome to the channel for another live stream on November 12th. All right, so today what we are going to do is go to normal and the usual setup. We'll take a look at the weekly range, the daily, and also we'll take a look at the hourly range, and we'll also take a look at the previous day AM session, which is the morning AM, and then we'll also take a look at the PM session range to see where we are, and then try to see, and then we'll see where price is, and then after that we'll take a look into seasonal tendencies, how we're faring with that, and we'll take a little bit look at gold, and then if we have time, we'll talk about a little bit of my journey history with trading and futures and all of that. So I may sprinkle that a little bit all over the place here. Yeah, because I'm not using a script. I mean, I do have a general plan, a general idea of what I need to do, but it's not necessarily something very, very, very scripted. All right, so the first thing I will do is take a look at the weekly. And yes, my charts do look like a mess because I make a lot of annotations. I want to know what's going on, and it doesn't matter which draft I use, which version. It's always a lot of notes that I need to make. Okay, so for the weekly, don't tell me. It seems like my screen is frozen. It's always when I'm going live, right? Trying to embarrass me as much as possible. Okay, I'm on now. Anyway, a little bit about my history then. So I started investing into the stock market right at the great GFC, the great financial crisis back in 2009. I've heard the battery in my mouse. So yeah, I knew about futures, but I did not dive into futures as much as I did. But I did invest in oil. I invested in airlines. I believe I invested in a couple. There was no ETF at that time, or at least I was not aware of any ETF. Okay. Well, at least ETF was a brand new phenomenon. Hold on a second. Okay, I'm back. Sorry about that. So yeah, so I invested in a couple mutual funds, dive into it a little bit, and I was just trying to do a couple dividend play. Well, just like most regular normal people, you don't know much about it. So your company tell you to invest in this mutual fund. I just went there and invest in. So between 2009 and 2014, so I was just passively investing into the market. I'm learning a little bit about it here and there. And I'll say right around 2014, I started to learn more about options. What is options? What it does? What are the the different participated in a couple seminars to learn more about it. And you got to remember, at that time I was fairly young, and I was just doing it just because I just didn't want to sit around and not doing anything. And I didn't want to live a life full of regret. But it wasn't like I was fully dedicated. In 2014, we're talking about 11 years ago, and I started to really pay attention to trading, investing more actively, like right around say 2019, 2020. And my first introduction back into it in 2020 was a channel, YouTube channel called EYL University, Earn Your Leisure. And there were a couple guys who were talking about investing and top funds. I mean, they did have like a lot of good program there. And one of them in particular was Ian Dunlap. So he was the first one who talked about futures and the difference between futures and forex, the different play, what is the meaning behind futures, why in futures you can make more money, and that instead of trading forex, why do you just play with the big boys and play the futures? So I was like, you know what? Let me take a look at what futures is. We're talking about 2020, right? Around that time. And I started to watch a couple of videos in the Think or Swim or what now they call Schwab. Like they give you all the theory, but I didn't have the mechanics behind it. Like how do you go into the chart and read it? How do you place your trade? What does it mean to win? What does it mean to make money using futures? And then it's until I watched a video that EYL University, EYL episode 70 by Ian Dunlap, and then it really break down what is futures, and how much money you can make. And then he said in a couple minutes you can make a lot of money, but you can also lose a lot of money. I was like, well, and then he kind of break down the different platform you can use, Ninja Trader, and you don't need a lot of money. So that's when I'm like, you know what? I feel like it's within my reach now to trade futures a little bit. Um, didn't mean to interrupt, but I think I'm gonna have to. So yeah, so the chart finally unfroze. So we are looking right now at the weekly range. I will come back to the story. That's not the end of it. That's just like half of it. So right now we're looking at the weekly range. We open up on Sunday at, let's see, 25 to 23 roughly. And right now we're still inside of last week's range, meaning the high and the low is still lower and higher than the currently range. So looking at this, what can you do about it? Okay, and I hate when it's doing this. So the computer was working fine until I go live, and now it's acting extra slow. Okay, there you go. Yep. So take a look at the weekly range here, and what you can do at this point is you can remove most of these levels. And I will drop a videos about the different levels within your fibs that you can use. So what I do here, so I do have the different levels here. You have the 250. So all these levels means something to me. And these are the things you can add yourself. So normally for me, when it comes to the 150%, and I believe the 150 and the negative 150, the negative 50, to me this two level is usually an area where price usually will trace if it's moving in a particular direction. So if price is bullish and the price step outside of the range, outside the negative 50 or the 150, when you get into that either 150 or negative 50, price will usually retrace or reverse, but mostly reverse, mostly retrace. I'm sorry. All right, so I usually take those off because I'm trying to find like a clean fib that I can use. And this is all the stuff that I do manually almost all the time. So I'm just doing it live. It just doesn't look as fun when I'm doing it live. And now that the computer is a little bit slower than usual, it's definitely not that fun. Okay. All right. So what I'm doing right now is defining the previous week range. So the entire range, taking out the entire candle to see where we are. When I'm looking at this on a weekly basis, just because when the premium doesn't mean we'll be going lower, but it's just that if there's a higher probability that price may go lower. So it may go deeper into a premium and this we can take advantage of the opportunity of price to go deeper into a premium. This premium went lower a little bit. Taking a look at this weekly high over there. Oh, goodness. So looking at this weekly high here, and price start shooting up a little bit more. Okay. So yeah, I'm just everything just moving really slow, and I rebooted everything. Okay. Now, so now we're taking a look on the daily, and we'll see a little bit more definition. So we saw that price open up, went up yesterday, or was that on the 10? Yep, on Monday it went up, created a new high since Monday, and then went lower, which was back up a little bit, and now you have price open up right here, went up a little bit, and now it's going lower. Now, just taking a look at the daily, we can safely say that it is more likely it will go low in the daily rejection block here. So it went up because if price was really bullish, what it would do is go up and keep going up. If it was very animated to go bullish, so what it did, it went up and say, "Nah, I'm gonna keep going lower." Now, how far low can it go? So we're looking right now. We're looking at the 50% of the previous day, and it is still above it. Okay, so let's draw a line here. Now you see all the steps that you have to take in order to figure out okay where price is going. Because if you don't do this, you're going to be trading blindly. So let's do this. Uh, let's make a dash. So I'm going through the steps so I can show you like when I do this execution, it wasn't because it's in a vacuum. And just because you're doing all this step doesn't mean you will not lose money. You will lose. But at least you can frame it in a way to say, oh, okay, you're gonna follow this exact logic and to see whether or not it will be in your favor or not. And if you use all this logic and it doesn't work, what can you do? Next time you adjust because you have a plan. So if you don't have a plan, when you lose, you will not be able to figure out, okay, what went wrong. Okay. So on the daily, looking at the previous day week discount, which is this one, it seems like we're slightly above half of that wick. And now that we have the week to the hourly, and I apologize for that, and it's just acting a little bit extra slow. Okay, let's take it down to the 60 minutes. Okay? So now, man, so what we've done is take it from the weekly, okay? Took it down from the weekly to the daily, and now we're looking at the 1 hour. And as you can see, if you had that uh, if you had that weekly Fibonacci set up since I would say since Monday, you would be able to see what happened at yesterday around 11 a.m. You will understand why price just dropped into this. Well, first of all, it went above the 50% of previous week, 50% range. So it went above it, dipped into it a little bit, went up, and then it went back down again a little bit, and now it's going back down again into it. So now you understand why price is navigating around that area, why it's not moving, because it's moving around the weekly 50%. And normally that's what price does. Price is always trying to trade efficiently, and efficiency is usually at around 50%. Okay, mid range. Okay, so this is where we are right now. So again, this whole Fibonacci setup here, talking about this green line, this red line, and this line here. This is the weekly. So we're above the 50%. We're at a premium. And also here, this line, red line here, is the previous day weekly low, and we are above it right now. Okay. So what can we do with this information? As you can see, price we claimed that 50% once, twice. In my personal experience, usually when price we claim it like this once or twice, and then we have this huge sudden movement, more than likely it will probably go through. Okay. So if you were to ask me what is the probability of what's going on, what would I do? I would say I would go short, because this had it's in a premium on the weekly and it's in a premium on the daily. Okay. So let me transfer over yesterday's AM session range and yesterday's PM session range. And I lost my mouse. All right, so in order to finish my story about my history with trading, while we're getting all this slow thing going on with the system here. So, well, where did I left off? So yeah, so I started watching Wire University episode 70 with Ian Dunlap, and he was talking about trade and how you can trade futures. And then I signed up for my Ninja Trader platform, which and I already had Take or Swim, so I started taking some trades in Take or Swim, and yeah, I was very profitable at first. And I'm like, oh man, this is easy. You know what I mean? So I'm like, yeah, that should be something very easy to do. And at first, it seems like it was until I lost. Yeah, I lost my rear end on that. And that's when I'm like, you know what, this is not as easy as it looks. So I went back, took a step back, and start learning about it. So I started to watch more videos about it. I bought a lot of books. I bought all Larry William books. I think Streets, was it Street Smarts or Streets Money? I don't know. I think it one that book by Larry Connors and Linda. I can never spell that last name. So that book, I started reading that, and I started to have a little bit understanding about trading, the different path and patterns, and then the next thing I started to watch is ICT. So ICT was highly influential about how I trade and how I do setups. So that's when I was able to blend all the teachings from ICT. I think it's Linda Connors. Let me see if I can find that book. I want to give them proper credit. Lawrence A. Connors and Linda Rashke. Oh Lord, yeah, I would have never guessed that one right. Yeah, so Street Mart is a very good book, very good book. Um, but the one thing about reading books, when you're reading the book, everything is kind of static. Um, and then when they give you a strategy or things to do, it looks easy, right? Because you have the whole graph in front of you. Oh, you could go short here, you could go short there, you could have short here, you could have short there. But when you're trading live like this, I mean, the right side of the chart is empty. You don't know what's going to be printed on the right hand side. Or the only thing you got is what's going on the left hand side. And the books never bridge the gap when you're actually trading live. They give you all these indicators you need to follow. And I'm not saying it's snake oil, but it doesn't help when you're trading live. Okay. So, with that being said, that's when I kind of verge into ICT. So, ICT kind of like helped me bridge the gap when you're actively trading. These are the things you need to pay attention to, and you kind of like use the different patterns and the different breaker blocks to enter to. So it was a hard for me to digest at first, but over the period of time, I was able to get over it and be able to use it. Okay, so while this thing was slowly and painfully getting all set up. So this is the PM session range from yesterday. This is the PM sessions. Obviously, we went all the way through it. And then this is the AM session range from yesterday. And we're actually going through it right now. So remember earlier I said if there's a probability, what I would do, I would go short. And that was one more indication for me to go short because in the AM session range, it was in the premium, and now it's slide into the discount now. Now at this point, um, I'm not saying that you should go long, but I would be very careful because it can really slide all the way down into the weekly discount, or it can go back up again into this premium and it keeps sliding lower after. But in the meantime, you're gonna get knocked out. Okay. So that's my word of cautious of that. So let's take it down to the 1 minute and let's have some fun. Yeah, it's gonna take a while to get there. Okay. So now that I got everything all set up, ready to go, there's a lot of evidence that there's a lot of heavy price action on the downside. Okay. And I'm looking at this weekly 50% here, and price is literally drawing into it. Like it's really like a magnet. It's really pulling it down to say, "Hey, come back to the mid range. That's where we want you. We want you to trade on the mid range, which is here. I'm going sideways. This is where the market is. at its best, trading efficiently. So what we traders try to do is take advantage of the inefficiencies, taking advantage of the imbalance of what's going on in the market. Okay, so where are the imbalance? Right here. This is an imbalance. This is an imbalance. Okay, so we're trying to take advantage of that, and I'm gonna make sure I highlight those imbalances so you can see. So there's one here, and it's big and obvious. So how do I identify it? This is this candle high, okay, and then this is this candle low, and then in between there are no wicks. It's nothing but a body, okay. So I want to make sure I identify that. But more importantly, it's not just to identify any gap. So I call them gap. You have to identify the correct gap. So the one I'm looking for is the one after the market open at 9:30. So which one is it? Man, it's all the way up here. Yeah, it looks like it just left the building and never came back. So let's identify that, because believe it or not, at some point price is going to return and it's gonna aim for that gap. Trust me, it will. Sooner or later. It's either, well, it's already past 10:30. Now that's the mystery about price. You don't know the timing. That's what makes it so much more difficult. I mean, getting the price right is already difficult. Getting the timing of it is even extra difficult. And then this is where you're gonna need a lot of experience using different tools, different methodology that can help you get there. But at the end of the day, it's just a probability and nothing is certain. And I will kind of discuss that a little bit today about a potential area or zone where price may reach back into it. Actually, let's do that right now. It's slow, slow, slow. Whoa. So, one way for me to identify potential area or zone where price at a time where price may get there is if the market is in symmetry. What do I mean by symmetry? So let me give you an example nearby. So a symmetry is if you split something in half, like you can see on the other side is almost the same thing. So let me zoom in a little bit more here. So I'm gonna use a box and I'm gonna identify the area that I say is in symmetry. It's not the perfect example, but this is an example because when it comes to trading, nothing is perfect. So this is an area in symmetry, meaning the left side here looks like the right side. Okay, so I'm gonna use this and I'm gonna split it in half. Yeah. So when you split that one in half, taking into consideration the highest candle, when I split it in half, you have once price start going up and then start going down, there's a high probability that price is gonna reach back to this low again, creating a symmetry. Left looking like the right. So when price is in symmetry, perfect symmetry, I'll say, you use your Fibonacci extension and the Fibonacci time extension, and you place it here. Okay, the initial point, you place it here, and then you kind of like drag it along. Guess where you put the 50%? Yes, you guessed it right. You can put it right here. Okay, so when it's in perfect symmetry, it works wonders. So I'm gonna zoom in a little bit more to show you what I'm talking about. And my patience is really burning thin right now. I really want to close the live stream and restart the computer, but I'm like, you know what? among all adversities, let's push through. Okay. So again, this is the symmetry area. This is where that level at around 1012. This is where price went. This is where price went up. This is where price went up and start going down. At that 50%, I'm saying that if price is in symmetry, there's a range after the 50% where price at those time zone where price is gonna hit there. Okay. So if price is really animated, it's gonna reach that. Um, hold on, do I need another battery for my mouse? Hold on a second. I'm back. I don't know how long this battery is going to last. Okay. Let's take a look here. So this is where was I? So yeah, so this is the low here, and I'm saying that price is gonna go up, and at what time is going to reach that low. So let me get a flat line so I can identify what price will be. You know what? Let's just use that red line. I can't take it. So that red line. So what time will price hit that red line that you see right here? Okay. So it will get there at around. So now that we know this, it get there at 1037. If price was really animated, it would get there at 1015, and it started to get really animated here. Big long red candle, a short one, and then it slowed down. Yeah, just like the analogy for an athlete that is running really fast and then take a break. Yeah, slow down here. But if it was really animated, it would get there at 10:15. But since price was going sideways for a little bit, so it's gonna take a lot longer to get there. So we're talking about you can get there at 10, either at 10:25, it can get there at around 10:37, which is where it got there, or it can get there at what time? 10:44. I mean, that is if it was really going sideways. When what sideways, what I mean is like this. It's not going up, it's not going down, it's just very short range. Okay? So price is in symmetry. To me, it's not the perfect symmetry, but it's a good enough example. So that's how I use my time extension. So we can use it here. We can kind of gauge on an area where price will get there. But again, like I mentioned earlier, what would you need? You will need a point when price is going to return. So for me, it has to make the low first, and then a confirmation where price is starting to go up, and then I'll be able to identify a time where it's going to get there. Me personally, I think it will probably get there in the afternoon. There's a little bit more to the downside. Okay, I'm getting all kind of notification here. Okay. Now let's try to see what price is doing right now. We're just probably gonna sit still. Let's say if price is going to use this as an area of a opportunity to go up. Let's wait and see. I think it's still gonna go down. All right, so let's see here. Let's see if I can remove this banner. So I know price is probably gonna keep going lower, so I'm trying to find an area where I can go short. Because it seems like all the area of opportunity for me to go short is already gone. So I'm just trying to find that best particular area to go short. And right now, it's just the whole price action looks like a mess. Just like my computer is a mess right now. So remember, so this red line here is the 50% of the wick, of the discount wick. And down below, we still have the weekly 50% that is here. Okay. So let's see what it does here. Is it gonna go higher than this? I'm gonna put a short. So we have a breaker, a high, low, and a high, high. And so far, all the breakers is being respected. I'm gonna put a short right here and see if it's gonna bite. And I will go ahead and remove this, or at least I will make it lighter. Actually, you know what? Let me just remove it. I think I gave you a good plain example. So to me, I think there's a lot more price action to the downside. So what you may end up seeing, it may aggressively get higher. I'm probably clearing up these highs here. So, and that's the dilemma. Like sometimes you see so many setups, you don't know which one to take. So let me take this out for an example. Okay. So to me right now, what I see as a potential setup that it may go up, clear those highs here, and go lower, or it's gonna get into this particular breaker here and keep breaking lower. Okay. So it's just that, and then now that it's moving like this in a very slow pace, sit and wait and see what is going to give you. Trust me, if you go into this like John Wick, you're gonna get John wicked. Okay, so the price doesn't care. So you have to use cautions and then be careful not to get wrecked here. Yeah, I mean, I could go in and kind of give you something, to see a couple of price action. But what I want to instill in you guys is to be able to be patient and sit and wait, because no matter how you trade here, I mean, you're gonna lose. Like for example, let's just say I put a long here. It can go deep into it. It could go higher, but even if it goes higher, I'm not gonna have much gains. Okay. Or what you can do is get into my long and then burn to it and then just hit my stop and then I'm out. Just like that. So that's why I said you gotta be careful, especially when it's so slow like this. I mean, especially around 10:50. What's that? 10:50, 11. I mean, if you're not seeing anything, just wait. Yeah, if you don't have patience in this game, I mean, you are going to get wrecked. You are going to get wrecked. If you're gonna go in and then you're just gonna be all willy nilly, yeah, you're not gonna make it very far at all. So let me find my time window. So usually my sweet spot, my time window is between 10:45 and 11:15, and that is 15 minutes before the hour and 15 minutes after the hour. Okay. So there was a good opportunity for me to go short here, but because I was doing the entire setup, I did not have a chance to participate. So what setup I was talking about? So that one right here. Okay. So why this setup is a high, low, and a high high. To me, breaking above this was significant, and price trade below it, went sideways, drop, come back into it in that particular gap, drop again. This is all signature of price going lower. Okay? And like I mentioned earlier, if I had went long here, there you go. It left the building and never came back. I put the short position right here. Did not even get into it. So you're gonna get that. Remember earlier I put an order here, did not even get there. What do you do? Find another opportunity. Now you might say, okay, it's going to retrace up and so you can go short. That's a huge maybe. Because what may end up happening, it may end up keep going higher and then break above and then pass your orders and then hit your stop. Okay? So you gotta be extremely careful. So to me right now, looking at this is extremely weak. So I'm looking at half of that candle. I mean, this is like a breakaway gap. I don't see it going higher than 50% of this candle here. So if I really want to take an opportunity for a trade, it will be like about right now. So take a short. I'm on. I'm like, come on, man, get in the trade already. Yeah, it's moving really slow for me, so it's making it a lot difficult. All right, come on. Yeah, these are those days I really dread. Like it's really moving really slow, and then it boom, it move. Okay, or it move aggressively against you. What was that? Now you see what happened. I hope you guys caught this live. So you see the shenanigan. My stop loss was right here. My stop loss got hit without even getting hit. Ah, you see the games that the brokers play against you. I mean, you guys caught this live. So I put my short here. My short was right here, and my stop, and then it hit my stop right here before I even get there. And the broker keep moving, keep moving the stop. It moved it right here, make it act like this is where my stop got hit. No, my stop got hit right here at 11:12, 9:11:16. The shenanigans, man. The shenanigans. So I'm glad I recorded this, and I'm gonna play it again, and I'm gonna show you what happened here. So this is being recorded. It got hit first, then they moved the cursors right here. Now that you got it at a loss, so now what do? You wait for another good setup. You wait for another opportunity. I mean, you can blame the broker all you want. At the end of the day, you suffer a loss. So do I abandon my plan and say we go long? Not really. And then do I go back with another two contract? No, I'm gonna go with half of the contract size. I'm gonna go with just one for now. Because what happened is once you suffer one loss, there's a high probability you're gonna suffer another loss. So you want to mitigate the amount of loss that you have. Are we at the end of the road? And I put a short order, and I'm not sure why he didn't take it there. Why did he take it so low? It's like, eh, man, I tell you. Anyway, we'll watch how this pan out. I think it will trace high enough for me to take another short. So we'll see. And sometimes if you see things are not going in your favor, you can either reverse or close it. You don't have to wait for price to hit your stop loss. Okay. Like why did he move it? Like I don't know you guys seeing what I'm seeing. I put a sell order right here and then it got moved to there. Okay. So even if you're a highly profitable trader and you've been trading really well, you still got to fight with the broker too. They can open the spread on you, just like they open the spread on me right here. They can move and shifting things around. So you got to fight them too. And then if you have a very good record of trading very efficiently, they're gonna do all these things against you. I mean, it could be my computer. Yes, let's blame it on that. But especially in forex, yeah, they do all this shenanigan all the time. And that's another reason why forex traders are less likely to be profitable because they do this even more. Trading forex. You see that red cursor here? It got moved again. It was here. It was here at 11:18. Now it moved to 11:19. Seriously? See, now this is again another proof why I usually don't trade this environment. Look, it's muddy. It act like it's going in your favor and it doesn't. It hits your stop loss. Like, look at it, ridiculousness. And then if you happen to reverse, then it's gonna go wildly against you. Now, why did it get so close and I hit my stop loss? I don't know. But over here, when I went short, it hit my stop loss before it even get to it. If you think I'm lying, just rewind the live stream and then you will see. I put the trade in and it immediately knocked me out. I mean, it would have knocked me out regardless, but it knocked me out before then, before I can even actually have an opportunity to say, hey, let me either close it or reverse it. Yep, classic. Hit your stop loss and then go back to the target. So see that one. Do you see any wick or any body, any candle body to my stop loss? No, there is none. Look, see, that's what I mean by open the spread right here. It did not even hit it. It just got here, and my buy stop loss, my buy stop here got triggered right here in that blue area. Again, Apex funding shenanigan stuff. Okay? Right here. Do you see any wick into it? Do you see any bodies into it? No. Even this highest wick over there, well, did not hit it. So, question remains: why did my stop get triggered? maybe it'll get triggered or hit in the future, but I'm out of the game. Like right now, I could have take the opportunity to just trail my stop loss and get a little bit of a profit. Nah. So me at this point, it's just too much shenanigans. So I'm just gonna literally stay away from it. So yeah. So I'm gonna downsize into a micro here. So this area in yellow is the liquidity void. I think the weekly liquidity void. So it's respecting that apparently. Okay. Now the reason why I'm switching to micro is I'm trying to see if they have the same shenanigans going on here too. Yeah. On all these areas where my stop loss got hit before it got hit, I'm gonna make sure I select those screens and I'm gonna show an example of how the brokers can spread the thing against you. I mean, there's nothing I can do about it, but I want to increase that awareness. That yeah, just knowing the right price and when to enter is not enough. You need to know all the risk that lay against you. Okay. All right. Let me see if I can get a buy stop here. Oh, actually, it's too high for a buy stop. Oh, come on. It got me in. Like, what's going on here? My entry is way below, and somehow I got in. Yeah, let's see if we can get into a little bit of profit here. So doesn't seem to matter. I mean, I was just giving it some room to breathe. I mean, it got into the trade prematurely and knocked me out prematurely, as you can see. All right, let me go half that size again. Like at this point, I don't even want to do anything anymore because I don't know where it's going to get. Let me enter on the trade. Like it's yeah, I'm out. I mean, if you're looking at this red dot here, it triggered my stop loss without even getting there. See, now it's about to get to that stop loss. Right now, how do you deal with that? It's a good question. The best way to deal with this is not to participate. You wait for the PM session. Anyway, let's take a look at seasonal tendencies. Let's see how we're doing. Yeah, I don't. I'm not a big fan of today's live stream. I had all kind of issues: computer issues, the broker issues, price entry issues. Like everything is going wrong all at once. But hey, we got there's plenty of topics to cover. So We're not stopping. So let's do it. All right. So I did mention my prognostication last week, it was on Sunday, that there's a probability that price is gonna drop a little bit lower, then start going higher. So we're starting to see that, and it seems like it did not even close above that high, and it's starting to retrace lower. Okay. So how are we looking right now? So at this point, on early November, the first week or first 2 weeks of November, usually price would usually spike up going higher. But now it seems like we are seeing kind of like the opposite. Well, are we? We had a little bit of a price run in early, so which is why it was a little bit early compared to what happened in November. So I'm attributing it to that. But again, the seasonal tendency, like I always said, it is a roadmap, not necessarily the end all be all. This is one of the tools you can use in order to have a prognostication of where price may be going. So, where do I see things going right now? Let's see. So, what's today's date is the 12th. So it seems like on the 12th we had a slight dip lower. Okay. And so it seems like we may anticipate normally a slight dip even lower. Okay. And then right out about, oh, come on. Can I get that precise location here? Right on the 14th of November to the 15th, well, 14th to the 17th, we may get a little bit of a spike up. But believe it or not, even with this massive drop here, we're still in the bullish market. Okay, don't get it twisted. It's still a bullish market. It's just a retracement lower to go higher. Just like right now, we're going into a small retracement to go higher. Yeah, and I'm anticipating the month of November is going to be like this. Lots of ups and down, lots of ups and down, a lot of surprises, a lot of twist and turn. Yeah, I don't anticipate anything less than that. Let's take a look. That's one thing I haven't taken a look at is the dollar. I've been neglecting the dollar. Let's see, and that's not good. Yeah, seems like we may get some price action going lower. You know, I'm stubborn. I want another crack at this. Hold on. Now, with this price action going on, what you may end up seeing, if it retraces up, it's gonna put me in the trade before you even get there. Let's see if they are done with the shenanigans for today. I guess not. So remember earlier I said there's a high probability that price may get higher and knock these buy stops. I mean, it got real close to it, but it didn't. Also, remember I said I wanted to use this gap here to make a short. I mean, see that? My lack of patience, what it leads to? Uh, yep, I did mention earlier we wanted to stream. It wasn't the mini, it was the micro now. It was in the mini. So let me go back and show you what I'm talking about. Uh, oh, where is it? Is it loading? So yeah, it was this one. I did mention earlier that I wanted to take short from here. Well, initially I would say, and then I said I wanted to take a short from here. Well, that would have knocked me out anyway. But this particular area I mentioned before, I wanted to take a short from here. And guess what? I could have taken a bite out of this going shorter. Okay. So this here is another proof that if you're not patient, if you're not sitting still, if you're not waiting for the price to come to you, you're gonna get wrecked. And then I got wrecked here. I got wrecked here. Well, did I get wrecked here? Yeah, I got a little bit of a profit here. But listen, I could have just went short from here. And this is what I'm talking about. This price action right there. Very little retracements. Bam, short and sweet. Aiming for 25,481. Yeah, let me take it back to the mini. So now why I'm downgraded to a mini is because I had two losses on the mini, and now I'm downgrading to the micro. It's all about risk management. 24,480. Yeah, but somehow I'm not getting my trade filled in. Okay. So yeah, going into this, just saying you're going to trade and everything's gonna be gravy, like there's a lot of things that's working against you. A lot. And you've seen some of it today. Okay. And if you're trying to wrestle with it and you're trying to try to go against the grain, you're gonna be the salmon. You're gonna swim against the current, and then by the time you get to the source to where you wanna be, you're gonna be dead. So be careful. Even the best of the best can get got in here. All right, let me try to take a look at the dollar here. Okay. All right, is it going to get to my trade? Is it going to get there? Ah, man, it's just slow moving. Everything is looking horrible on my end. All right, so I'm trying to move a screen over for the dollar, and it just won't let me. Finally, ooh, Ray, man, it make me feel like I'm not a professional, man. Okay, so I've been neglecting the dollar, to be honest with you, but you shouldn't. So what's going on with the dollar is just the reason why I've been neglecting it is because of this. So it's not just on my 1 minute trade where I start neglecting stuff. It's just that once I start trading in this range like this, until I see it come out one way or the other, like the whole body coming out, I usually just block it out. I don't want any part of it. So the dollar's been going, and this is a weekly. This is a weekly. It's been going sideways for a long time. What since the summer? Yeah, that's when I start looking at. It. That's when I stop looking at it. The summer is going sideways every week. Every now and then I take a look. I'm like, man, still in the range. So that's when I'm like, I don't want any part of it. So it seems like it finally came out of that range of 99, 109. It's poking out. It seems like it may retrace. lower, and then go higher. But why am I kidding? Yeah, this thing can go either way. Again, we have a breaker, a weekly breaker. It's a high, a low, and a high. It drop lower, cut it from here, and then got into half of that gap over here, and yeah, and then keep going lower. Make another attempt to get higher on the week of July 28th, and it seems like it's gonna make another attempt to go higher again. So if I am right on this, with dollar going lower then to go higher, once it reach out beyond that range of 100.25, if you have a body that close above it, I think it's gonna keep going higher and higher. And guess what's gonna happen to Nasdaq? Yeah, it's gonna keep going lower and lower. Okay. And guess what may happen to gold? Gold may go lower as well. So it's the dollar against everything else. Okay. So yeah, it missed my entry here. Yeah. So the moment it kind of like missed my entry to get here, which is like right below that. I don't know why I didn't choose that particular area. It's still a miss. Yeah. So I didn't want to drop it too low, so that's why I had it right up here. I wanted to get at the bottom of that candle right here, but apparently it didn't get there. And this is the part when you say, "Hey, okay, let me just trace it." Mm-mm. Don't chase it. Just let it go. Find another setup. I mean, especially the way it's been acting lately, at least for me on my end. Now, you may look at your screen and then you don't see all the shenanigans that I highlighted earlier. And the only reason why you won't see it is because brokers can literally move things against you. So just because you don't see it doesn't mean it's not real. And as you can see, if you rewind this, once the stream is over, once you rewind this, you will see all these movements against my limits, against my stop loss, they're activated before price even reach there. And that's just futures. In Forex, you get tons of that. And I only traded Forex for a little bit, but the enough time that I've seen it, and I'm like, no, I can't. It can't be. I'm like, nah, there's no way. Now, can I take part of this going up? Sure, I can. You know what? Let me do it for y'all. Why not? Jeez, look at this. Oh, it's acting so slow. See, again, it hit it before you even get there. Whether it's in my favor or against me, I'm gonna point it out. And these are the time for you not to move your stop loss too close because it's going to hit it and trigger it before you can even move it. All right, so you want to see proof of that? All right, cool. Since you don't believe me, look here. See, it hit it before you can even move it. Like, and then it moved the stop loss over. Like, these are the days you really can't play around. I mean, I mentioned it before, and it actually happened. I said, I'm like, okay, you don't want to say it. It's gonna trigger it before I even move it. The moment I moved it, it triggers it. So yeah, again, this is one of those days. It's just like, you know what? Let me just goof around. Yeah. So yeah, man. But I mean, obviously, when you after a while, when you look at it, it kind of move into it. But if you're not recording this, if you're not watching this happening in real time, you're gonna think it's made up. So again, let me identify for you when you're trading what's moving against you. So your lack of experience to see where price is going is working against you, and you have the market makers intervening into the market is working against you, meaning you think it's gonna go up and then actually go up as a manipulation and then yank you down. So there's that. And then there's actual also the manipulations such as there's a lot of wick. It's moving up and down. It's triggering your buy stop. It's triggering your sell stops all over the place. So those are the market makers, right? And then you have your inexperience, and then you have your lack of plan, and you also have over leveraging is working against you. Um, Trading too much is working against you, and you also have the brokers. Right now, as you just see today, you just see the brokers is really actively working against me. I mean, am I going to use that as an excuse? No. Um, like I did is I just downsize the entire time. I use two mini, which is $20 per point. I use two contract. Once I had a loss, I use one contract. And then once I lost my trade to that one contract, then I downsized to micro. So it's $2 per point. Okay. And then I use five contract. And then now I use two contract. And now if I'm trying to get in, I use one contract until I'm done for the day. And then I wait for the PM session or I wait until tomorrow. This is not all bad news because when these things happen here, usually in the next session, whether the PM session or tomorrow or Friday, things get so sweet. It's not even funny. You see things like literally you're gonna put your limit orders here, you're just gonna trigger it and then it goes all the way up to where you want it to be. And then there's gonna be very little wick, and then there's gonna be just big candles just like this one, just like this red candles here. You're gonna see nice red candles like this. These are what I call low resistance or favorable conditions. Like it's just big candles and just move in your direction without any hesitation, without any back and forth, without any wicks. But usually in the next session or a couple of days later, you'll get those sweet, sweet, sweet price action, which is why I don't. And the loss happen, I just take it in, and then it's okay because I know better days are coming ahead. You don't want to waste your ammos in those particular conditions. Yeah, I mean it's not bad, but it's just that any trade that I put in, I don't know if it's gonna trigger too early. I don't know if it's gonna trigger too late. The uncertainty is too high. All right, how long have I been rambling here? I feel like I've been here for a long time, and I think it's probably time for me to cut the stream off. All right, so what did we cover today? So a little bit of history about my trading history. I cover about how you take it from a weekly to a daily and to an hourly, and then looking at AM session and PM session. Um, to our surprise, we got a new topic covered: spread, the brokerage, the spread against you. And these are all the things you sign up for. This is all the things you agree on when you click yes and you sign it on the dotted line. Um, when you sign up for your brokerage account, they did mention that they can do this, and then they can literally go into your account, tap into the liquidity, and take all your funds. Yes, they can do that, and there's nothing you can do about it. There's that. What else we cover today? We looked into the seasonal tendencies. We'll take a look at the dollar and then why I have not taken a look at it. But I think it's coming to the time that I need to start take a look at it right now because it seems like it's trying to come out of range. Um, did we cover gold? Oh no, we didn't cover gold. Yeah, I'm gonna cover it briefly. Let's see. And then one thing we talked about is pushing through technical difficulties. I had a lot of technical difficulties today. The mouse is moving slowly. Everything is just glitchy. It's not smooth at all. But instead of saying, okay, I'm going to close the live stream, I said, let me push through. Okay, so how are we doing in gold? It seems like we are pushing far up. Okay. So I did make a bold prediction that gold may drop into 3880. It seems like it may have come real close to it and say, nah, denied. Let's see here. Actually, did it even come close to it? Not even. Yep, that's 3900. Yeah, 3880 is somewhere around here. Yep. It's okay. We can never get it right 100%. So, yeah, it seems like there's that big drop here on the daily. Um, yeah, I will have to wait and see what happened here. I mean, you have all these levels out of here. It dropped into the discount wick here on the weekly, and then it pushed up, pushed way past this, and then pushed way past this. And then with this government shutdown, it's making gold very favorable at this point. Hmm. Okay, was I wrong? Halfway. So let's see. Yeah, for me to engage gold, I'll have to see it go past this gap here on a daily, and then we'll trace a little bit lower on 42.26, and then push higher for this high right here. My target will be 43.74. Now, I did mention that by the end of the year, gold may reach 4,800. Um, but if you're gonna retrace to 3,800, how would it go to 4,800? You have to be big, long range candles, right? And we're starting to see them right now. So it's pushing. Yeah. Yeah, I would abandon the idea for 3,800 right now. Doesn't mean it won't get there. I mean, I've seen worse things happen. It may get at 43.15 and then peters out and go lower. But what would be the conditions for that? It will have to be good news, right? That means the dollar will have to strengthen. That means that we're going to get a new source of energy, or the market is going to get better. There will be all kind of good news and employment, and people are going to be like, you know what, instead of putting my edge against gold, let me just go back and invest into the market or invest into the dollar. That's what will have to happen for it to drop back lower into 3,800. I don't see that happen. What I'm seeing happen is more unemployment, bad news, more WAR in somewhere in the eastern area. I'm not gonna mention the name of those countries because YouTube gets very sensitive on that. Yeah, I see a lot of bad stuff coming, especially in the Caribbean. You have WAR potentials that may happen there. So, with all that being said, I can see a lot stronger push for gold to go higher up to 4,800. I mean, how far up we're talking about here? 4,800. Yikes! Yeah, that's pretty high. By the end of the year, man, I don't know. Maybe end of first quarter next year. Yeah. Anyway, so yeah, I think we covered a little bit of all of it today. I can't promise anything, but if the conditions are favorable, I may come back on Friday. It'll probably just a quick drop in. And I'm gonna try to see if I can find another time to meet, maybe later on at night, where things are a little bit smoother and then the electronic trading is more favorable for my conditions. I'll try to come online. But yeah, that's all I got for today. Thank you, everybody.